Watch closely. The moment Mark Wahlberg signed the papers for his Florida mansion, something far bigger than a celebrity purchase quietly unfolded. That one decision exposed a set of hidden opportunities most people never even think to notice. He paid around $37 million for a fully furnished Italian-style masterpiece in Delray Beach's ultra-exclusive community known as Stone Creek Ranch. But behind the glamour lies a story of margin, timing, and strategic risk, the kind of story that separates those who watch opportunity from those who seize it. This isn't just a tale of luxury. It's a blueprint of how money moves when vision meets precision. Let's start with the man behind the numbers, Aldo Stark, a spec developer who plays the high-stakes game of flipping ultra-luxury properties. Early this year, Stark bought this same mansion for roughly $40.1 million. Most would have held it and waited. He didn't. He poured capital into a full renovation, transformed every surface, redesigned interiors with imported materials, filled it with high-end furnishings, then relisted it within months. When Wahlberg arrived, he wasn't just buying walls and ceilings, he was buying an experience, a turnkey lifestyle that screamed discretion and achievement. The sale closed at $57.1 million, leaving Stark with an $11 million profit in less than a year, a return of over 40% in a single cycle. That's not luck. That's precision, timing, and a deep understanding of where desire and scarcity collide. So the question becomes, why here? Why this property? Why now? To understand that, you have to see what Florida represents right now in the world of capital migration. Across America, money is moving south. Wealthy families, entrepreneurs, and entertainers are leaving states with high taxes, tightening regulations, and shrinking privacy for places that offer space, warmth, and financial freedom. Florida's no-income tax policy is the obvious headline, but that's not the full story. The deeper force is lifestyle arbitrage. People want what feels rare: safety, sun, water, and exclusivity. And that's exactly what Stone Creek Ranch sells. Hidden behind guarded gates, with palm-lined drives and perfect symmetry, this enclave isn't just a neighborhood, it's an ecosystem built for the ultra-private. Each home sits on sprawling acreage. The air is quiet. The sky seems closer. You're 15 minutes from the ocean, yet miles away from noise. It's the kind of environment where high-profile individuals can breathe without the cameras, where privacy itself becomes a form of luxury. Inside Palazzo di Lago, Wahlberg's new retreat, that privacy meets art. The estate spreads over 18,000 square feet, 7 bedrooms, 10 full bathrooms, 2 powder rooms, a cinema room, a climate-controlled wine cellar, a gym that opens onto a tennis court, and a wellness spa built like a private resort. There's even a hidden cigar lounge equipped with advanced air filtration so that no scent lingers. Every detail speaks of obsession. Nothing about this property feels accidental, not the Italian arches, not the cascading saltwater lagoon pool that holds 170,000 gallons of crystal-clear water, not the hand-polished stone floors. It's designed to evoke a feeling, that blend of European romance and Floridian ease that makes you forget time. But here's the mentor's lesson hiding in the marble. This isn't just real estate, it's product design. Aldo Stark didn't just build a house. He built a story, one that buyers could emotionally step into. He turned bricks into belief, and that's why he earned such a margin. Most investors look for cheap land or cheap materials. Professionals look for untapped emotion. The value wasn't in the renovation cost, it was in the perception engineering. Stark sold not structure, but status. He created a narrative so strong that the buyer saw not price, but identity. Now let's break that down, because what happened in this deal applies to anyone serious about recognizing opportunity. First, understand location exclusivity. Great properties don't just exist, they are designed to feel rare. Stone Creek Ranch only has a limited number of estates, each shielded by landscaping and private gates. That scarcity creates built-in leverage. When you control access, you control value. In real estate, privacy multiplies price. Second, focus on upgrade depth. Don't randomly invest where the buyer's emotions live. People pay for what they can feel. Textures, light, comfort, innovation. Stark's upgrades weren't just functional, they were sensorial. A new lighting system, imported flooring, bespoke furniture, every improvement whispered wealth. If you ever plan to renovate or develop, this principle stands. Put money where the next buyer's pride lives. Third, time the market sentiment. When the broader real estate market slows, cash-heavy buyers dominate. Interest rate noise doesn't matter to the wealthy. What matters is safety and symbolism. They want assets that hold prestige even in turbulence. By flipping during a cooling phase, Stark positioned his property as a fortress of value, something rich buyers could park wealth in when stocks looked uncertain. Fourth, build a brand narrative. Stark's listing wasn't about square footage, it was a short film about aspiration. The marketing called it an architectural masterpiece inspired by the tranquil glamour of Lake Como and infused with the allure of Bond's Casino Royale. That's not exaggeration, that's branding. When your property tells a story, your audience stops comparing it to others. They start imagining life inside it. And that imagination is what sells. Fifth, understand tax structure and capital flow. High net worth individuals and developers use legal tools like limited liability companies, depreciation schedules, and capital gain treatment to magnify net return. It's not just about making a profit, it's about keeping it. Florida's tax code, combined with smart entity planning, can turn an $11 million gain into something far more efficient after write-offs. So, while the headlines celebrated Wahlberg's move, the real thinkers saw something else, a case study in how modern luxury deals get engineered. Think about this. Wahlberg recently sold his Beverly Hills estate for nearly $100 million to Paris Hilton. He originally bought that land for around $12 million over a decade ago. He built, held, appreciated, and exited classic long-term wealth logic. Then, instead of sitting still, he reinvested into Florida, a state with lower taxes, rising infrastructure, and booming cultural pull. That's not random relocation. That's portfolio optimization. He once said he wanted a place where my kids can flourish and pursue their passions. That may sound emotional, but financially, it's identical to what entrepreneurs call lifestyle alignment. The best investments serve your wallet and your well-being at once. Florida offers both. Now, what does this mean for you, the viewer, the learner, the future investor? It means this: opportunity is never hidden. It's simply disguised as luxury, routine, or someone else's decision. You don't have to buy a mansion to learn from one. The same logic applies to any market. Look for regions attracting new wealth, study how developers add perceived value, and understand the narratives buyers tell themselves. When Wahlberg buys in Delray Beach, he's not just moving, he's validating the market. And when developers like Stark flip within that ecosystem, they're proving that storytelling still drives returns more than raw materials do. So, the next time you read about a multi-million-dollar sale, don't scroll past it. Decode it. Ask, what macro forces are behind it? Is migration influencing demand? Are local taxes shaping price floors? Are privacy and exclusivity becoming currency? Each question helps you read markets like professionals do. Here's what most people miss. Real estate, especially at the high end, is not about land. It's about psychology. People don't just want space, they want symbolism. When you understand that, every neighborhood becomes an opportunity map. And Florida right now is the best example. The state's growth rate, migration numbers, and construction booms are all public data. They reveal a pattern of north to south wealth movement that hasn't slowed since 2020. Families, corporations, and global buyers keep choosing Florida for the same mix of climate and control. Add to that the visibility that celebrity purchases bring, and you get a self-reinforcing loop: demand feeding perception, perception fueling more demand. Aldo Stark simply saw that loop early. He knew that when someone like Mark Wahlberg buys there, the next buyer will pay even more. So he moved before the headlines did. That's the edge of a professional investor: not access to secret data, but the courage to act on public information faster than everyone else. When you grasp that, your whole perspective on opportunity changes. You stop waiting for perfect timing and start building conviction through research, creativity, and pattern recognition. So, here's the quiet truth this story teaches. Wealth is rarely loud. It moves in silence, in renovations, in contracts signed behind guarded gates. By the time the public hears about it, the profit's already made. Mark Wahlberg's Florida mansion isn't just another celebrity indulgence. It's a signal that tells anyone paying attention where the next cycle of growth, privacy, and prestige is heading. And if you can learn to see that signal early, you'll never chase opportunity again, you'll meet it halfway. Because behind every glamorous headline, behind every marble fountain and golden doorway, there's always a deeper reason, a financial truth wrapped in a beautiful disguise. And once you learn to look for it, you'll start seeing what the rest of the world completely misses.